Chapter.
Hey everyone, welcome to the live stream. We are going to be talking about the Tesla earnings report that is due in 6-7 minutes. We'll take a look at the numbers. We will analyze the company, see how they're measuring up to their valuation. I like to look at the value of a business based on future free cash flows as well as profits. We'll talk about the charts on Tesla, see how that stock's been trading. We'll have my colleague Daryl take a look at those charts and offer his interpretation of what has been going on and what potentially might happen going forward. How you doing, Daryl?
I'm doing wonderful, Victor. It's good to be here. Hello, everyone.
It is great to be here. Now, the market did not treat everybody kindly today. We've had a little bit of a sell-off. The S&P was down 0.53%. The NASDAQ was down 0.92%. Small caps really went down in general. So we had a lot of stocks selling off, and we had a couple of stocks kind of holding their value. Google, IBM's rallying into their earnings release. Apple gave up some of their stock price. Looks like AMD gave up a lot today. Amazon, the 2-day win streak is over. The Amazon stock is down. GE settled down after announcing earnings, I think, yesterday. Netflix was the big news. Boy, down 10%. That was a pretty good haircut. So let's take a look at Tesla. That's going to be the primary focal point today. We've got 288 people on the stream. Thank you, everybody, for joining. Tesla is a $1.46 trillion market company. And when you look at this stock, it really offers points to buy the stock, and then it rallies higher. It really does have enough volatility to enable somebody to buy and then make a very good gain. For the year to date, it's showing 8.69 as an rate of appreciation. But boy, if you bought it at a low point, you pretty much have doubled your money, which is a very good return. For the 1 year, you would have doubled your money if you bought it exactly a year ago. Over the 5 year, this is a winner, 211%. You see that volatility. So stocks like these, I actually like volatility. It kind of makes you pay attention, makes you track stocks closely, but I really like volatility. So this stock here, $92 billion in revenue, PE is a little high, and analysts do think it's a little expensive. Let's take a look at what analysts are expecting and what we're going to need to match up on with regards to their earnings. So they think it's a little expensive. They're expecting for the quarterly, and I think we're looking at the third quarter that just ended. We're expecting earnings per share of 55 cents. That is a decrement compared to a year prior. We're expecting growth of 6.28% up to 26.76 in the quarter. We'll see how close they get there. And that's 34 analysts weighing in on that. Overall, the company is expecting to grow in the future. That looks pretty good, pretty darn good. And the profit's supposed to expand. So that looks really good, the expansion of profit. So that's what's going on with Tesla. Any initial thoughts on Tesla before we crack open the earnings in a couple of minutes?
So they are showing positive strength on the chart. The RSI is currently sitting at 55, and the PPO is showing bullish momentum. The options implied move is 7.2%. It was 7.9% when I calculated over the weekend for a video, a short that I did. They beat analyst 1 year forward estimates 45% of the time. You mentioned the 56 cents normalized and 44 cents gap, and they're expected to report 26.7 billion. And over the last 90 days, 17 analysts have raised estimates and 5 have lowered estimates. On the chart, we do have an upward trend line from the April 21st low. They are trading above a 20-day upward sloping moving average, 50-day and 200-day. And I think most of the car deliveries were pulled forward for the most part, so I don't know what to expect for this particular quarter. I think they're going to look good, but I don't know what the guidance is going to be.
Yeah, I think they're going to have a good quarter because I think the termination of the federal EV tax credits created a big demand cycle where people wanted to buy in the month of September or before, so they could take that advantage of the $7,500 tax credit.
Yeah.
So I think it's going to be a good quarter. I was impressed with the forecast that analysts are putting out there that they're going to actually grow next year and the year after. I wonder where that growth's coming from. Is it cars? Is it something else?
That's a good question. I think it's probably would be mostly robo-taxi, I would think, if they can get some
So it
get their plans wrapped around that.
looks like they may have dropped their earnings announcement here. Let's see here. All right, so
Yep, they sure did.
So they achieved record vehicle deliveries. Very good. Profitability, they were profitable. Cash flow increased, free cash flow increased. It was a good quarter. They launched ride-hailing service in the Bay Area using robotaxi. They have energy storage deployments. Now that might be a way for them to grow, is energy storage, right? Batteries that people can install in their homes. And I have solar in my home, and I've been very satisfied with it. Saved me money. We didn't get any batteries because I thought it was the cost to benefit ratio wasn't there for me, but I could see how a lot of people would want that. So here we go. So automotive revenues, the quarter we're dealing with is this guy here. It's colored, I think it's pink on my side, and looks like we're in the way of the chart. So they move us. All right, moved us. And it was a 6% growth on total automotive revenues. And you see right there, energy generation and storage revenue went up 44%. Now, that's becoming a substantial number of 3.4 billion. That's pretty good. And then services went up 25%. So this is, I think, an impressive number. I wonder what their margins is on that product. So total revenues, 28 billion. Their gross profit did go up a tiny bit, 1% increase. They're not a very high margin business, right? 18%. Welcome to the automotive industry. And so that looks okay. So earnings per share came down. I think they did caution everybody in previous quarters that, hey, we got some tough quarters ahead coming with Tesla. So they kind of guided us into that. Now, cash flow looks really good. That's a good cash flow number. And their cash and cash equivalents looks really good, 41.6 billion. So they can continue to grow. So that looks good. All right. So overall, I'm seeing positive news. The stock is moving slightly. So the algorithms are not quite sure what to do here. It's not a big mover. We had a down day on Wall Street, right? So maybe Wall Street's like, well, let's not let the algorithms go wild. Let's kind of read through everything, listen to the earnings, then we'll make a decision on Tesla. Right now, it's pretty much flat. So I'm not sure I'm seeing either the market's approval or rejection of that earnings just yet. Any initial thoughts on what we're seeing, Daryl?
It's actually not looking too bad. We are getting a little bit of volatility, even though the price pretty much ends up where it closed. I have 5-minute bars here. So, but we are seeing some big spikes as we go through the earnings, but it ends up settling down about where it closed.
So there's a lot of indecision. You got some investors that are buying, some investors that are selling. Is that what you're seeing?
Yeah, that's yeah, I think you're right about the algorithms. They don't know what to do at the moment.
Yeah. All right. And again, the one area that has potential is this energy generation, business. It's becoming a substantial number. And refresh my memory, Tesla, are they installing solar panels? Is that part of their business now, or is
That
it a separate business?
that is part of their, I don't know if they actually do the installation, but they have the solar panel business.
Mm-hmm. Yeah. And I know that has lost a lot of government support as well, with a lot of government incentives. I know personally, we got our solar panels installed 3 years ago. We did have a lot of government incentives that was one of the drivers for us getting the solar panels. And then it drove a cost savings per month, but the initial cost was greatly reduced. I forgot how much the credits were, but they were like 10 grand or something like that. 10 grand or a little bit north of that, which is a pretty good amount. So overall, the car deliveries, that's not where the value of the business is going to be for the future. But if they get that storage business for power, I think that's got some legs. And I'm sure that they're probably installing a lot of those batteries, where data centers reside. And they can store that power generated with solar panels during the day, load up those batteries, and then power the data center at night off the batteries. That's not a bad, I'm not an engineer, so I'm going to probably oversimplify it, but potentially I could see that there's a use case there that has quite a bit of demand coming through the data centers. So overall, I'm seeing the earnings is fairly good. The numbers look good. I wonder what. So, what about the robot business? Are they going to talk about robots in their numbers, or are they just going to talk about it in their conference call and tell us how great they're going to be in the future?
Is that actually part of Tesla, or is that part of the non-public businesses?
Really, that's not part of Tesla, huh?
I don't think so. I thought it was.
In
Thought
the
that.
chat, if somebody knows, is like the whole robot ideas for Tesla, is that part of the Tesla business, or is it going to be a separate company? Does anybody know? See if somebody in the chat knows that detail. Well, they got a robot picture. Does that help? Optimus. All right. Yeah, they got more Optimus robots here. I thought they were going to have a robot business. So we'll see. I'm going to research that, and I'm going to.
Yeah, we
When
need
you
to.
have this,
Yeah, we need to know whether it's actually slotted under Tesla or one of his X businesses like SpaceX or
right,
I don't know,
X.
Robot X.
Well, X, like the whole AI large language model with what used to be Twitter.
Yep.
That's a separate business. That's not part of Tesla, correct?
Nope. No, it's not.
So is the robot business going to be separate? Because when I've gotten comments on Tesla, other investors have assumed that the robot business is part of Tesla. So I agree with you that that's really important to know, because if it's not part of Tesla, then we can't put that in future, expectations and value the company based on that. So that'll be a confirmation point. All right. So we got the earnings. What's the stock doing? It's down a little bit. It's under
Yeah,
pressure.
just a little bit.
Yeah. I wonder if so the earnings call is going to start in 15 minutes. And I wonder once Elon Musk talks, will the stock rally? Maybe. He's a pretty good talker. I think
Yeah, he is.
he can make the stock rise. So I didn't see any comments to see if they have the robot business as part. See automotive, energy generation, and storage.
I'll ask Jim and I real quick.
Yeah, please do. Yeah, it looks like the robot business may not be part of it. All right. Well,
Gemini says it is.
yeah, interesting. Okay. So
Yes.
at this point, do you want to go into some charts and kind of look at the history of Tesla, or would you like me to work on this valuation, real time and do the intrinsic value?
We can look at the charts. Let me
All right.
pull them up, and we'll just go back. I don't know. We'll go back a long time. They traded for years at about $2.30 up through 2013. They had a big step up in price to about $17 a share, and that went from 2013, 14, 15, 16, 17, 18. And then the end of 2019, they went on a big run of 1,793% from the end of 2019 until their peak in 2021. And it looks like they did a couple splits. They did a 5-for-1 split in August of 2020, and they did a 3-for-1 split in August of 2022. Since they got to these higher prices, basically at the end of 2020, they basically just started trading like Victor mentioned. Oop, that's the wrong tool there. They started trading just in a range, a sizable range, down to $100 up to $450 or so. So then it became really a trading opportunity, and I think that's what Victor was speaking to when he was talking about the volatility. Is this definitely becomes a trading candidate, because your money's just kind of sitting there in a range for quite a long time. So let me get this Gemini off get my screen back to the proper size. Okay, now we'll come back into just a year's view, and we can see that they've traded as high as 460 this year, down to 214 or so, but they have been on an upward trend since the 21st of April. Still a lot of volatility. Got a little tighter in here for a month or so. This was probably the delivery numbers for the third quarter would be my guess. And then it kind of stabilized again, traded sideways since the 15th of September, right around this 470 down to 416 range. They've done a good job since March of holding a RSI that's 35 or 40. So they haven't gone into an oversold condition since the February and March sell-off. So they've done a really good job, the price has, of holding that level. Let's see. The accumulation, it was pretty flat at the beginning of the year. We had a surge through May, a little bit of a distribution through June, and then since June, it's been under pretty much persistent accumulation, and we can also see the money flow has been positive since I would say the middle of July. So that's what I'm seeing in the charts. I don't really, well, let me look at one other chart. And we looked at this probably a month or so ago.
Have you bought into Tesla? And if so, when and what happened?
I'm playing with a very small position right now. And the reason I am is because of this chart that I'm showing you here. This is what they call a cup with handle pattern. And basically, when one of these occurs, you can basically measure down from the right rim down to the bottom and measure the price difference in dollars and then add it to the price at the right rim, and that'll give you a price target. And that got me a price target of about 512. I was really shooting for about 480, which would have been the high in December. And then instead of this cup and handle really fulfilling itself, it just started consolidating. And I don't know what to think about a breakout above that upper rim, 3 or 4 months later. I'm not familiar with all the details of this kind of pattern to understand if that invalidates it or not. So I bought Tesla when this had originally formed, and I had a price target of about 489, which it got pretty close to it. We were at 470, but then it kind of stalled out. So that's why I got into it. It's not one that I hold persistently because it doesn't really fit into my long-term strategy, which at this particular point is for income. They don't really provide a dividend or anything like that, so it's not really an income play. But occasionally I'll buy into stocks like this, basically to keep myself entertained.
Very good. So, thanks for doing that. Just a quick answer to a question. What made us think that was this robot business separate from Tesla? It's because when we're looking at their financials, there's no robot transaction. They haven't sold any robots. They've sold storage of power. They've sold other things. So that's what led to the need to clarify, confirm, hey, is the robot business part of Tesla? And we've concluded that it is. But they're not selling much, if any of it. It's not coming up in their financials. So that was it there. All right. So thanks for doing that, Daryl. Anything else on the charts?
Nope.
All right. So taking a look at evaluation. Now, Tesla, I'm valuing it based on future free cash flows and future profits. And Tesla is a big idea company. So take this with 2 grains of salt. 2 grains are necessary, not just one. And it's just where the numbers land. When we look at the trailing 12 months plus the growth rate of the business, I'm growing them at 15%, which is rational. And they don't have a lot of cash flow, right? If you're going to be a $1.4 trillion market cap company, you're in company with Meta, which produces $25 billion of free cash flow. So those two numbers are very different. 6.8 billion, 25, and Meta's valuation is much higher when we look at free cash flows. So Tesla values quite low compared to its market cap because the forecast for free cash flow is what it is. It's not comparable to its peers in that list the most valuable businesses. Has good cash balances. It does have some debt, but not too much. And overall, it's priced 75% above the value of the free cash flows. If we look at a net present value, that's discounted by 7.5%. When I look at profits, the profits did go down. Okay. They've cited that in their earnings. They have come down. They're actually lower than what were being projected a few months ago. And I'm willing to go 36 PE, but that is it. And that's pretty generous for a company growing at 15% with low margins. Growing it by 25%, again, 76%, too high. What's the difference between intrinsic value and where the stock price is at? Is I think a lot of people believe in Tesla. They believe in the potential. And that's that. This stock does not trade on valuation. You can construct valuation for companies like Meta, Google, others. Tesla just doesn't fit into that mold. And is that going to be a liability for investors? I don't know. Let's go down the road and we'll find out together if this stock ever comes down to its intrinsic value, or if the business is going to wow us and start producing products that are just going to be so valuable and they generate so much free cash. But it is a car business principally. In car businesses, they don't produce a lot of cash and they tend to be not very desirable because you have a bill of material with thousands of parts. The distribution costs are high. You have intense competition from automobile producers that are quite good, like companies like Toyota, Mercedes. I mean, we've got some really good businesses that produce cars. And I would say that they're very good at producing cars, but cars themselves, it's not a very desirable business. So that's my valuation on Tesla.
And that's really where the dichotomy in the prices comes from. There's their car maker camp, and then there's their robotics and robo-taxi and their storage business, although people don't talk about that a whole lot, although I think it has a lot of potential. And that's the other camp. They're the ones pricing it at $449.80. And then the car maker camp, your price is even a little higher than mine if I just look at the fundamentals. So we have just two groups of people that are working on this company, and one prices it very high, and the other one prices it like they would GM.
Yeah. And what I would say, right, is that I'm using Tesla produced financial statements. That's the main ingredient of my valuation. And that's the valuation of, and I'm not calling them a car company. I won't call them a car company, I should say. I won't call them a storage company, energy storage company. But I'll just look at their numbers, and their numbers land very differently than probably, let's take a look at the nearest company to Tesla is Broadcom, 1.6 billion, and then TSM. So let's look at those businesses and show the difference in free cash flow. Because of course, Broadcom wouldn't be offended if you called them a semiconductor company. They'd be like, yeah, that's what we are. We're a data center company. And TSM would not be offended. They'd be like, of course we're. So there's very clear what these guys are. But let's just remove those labels and look at financials. What do the financials show us for our friends over at TSM, which is slightly lower in market cap? And I probably picked the wrong one, but I'll try to work with it because these guys are Taiwanese. So cash flow, they're producing $29 billion of free cash flow. And Tesla is at, and this is not going to have the most recent quarter, so I'll kind of add it on the fly. They're at 5.59. It was a little bit higher. It was like 6.5 billion, I believe. So 6.8 billion. But the point being is remove the labels of what type of business it is. But if you were offered a business that gives you $6.8 billion of free cash in a year versus a different business, you don't know what it is. They give you 29 billion. Obviously, 29 billion is way bigger, more valuable, and their forecast looks pretty darn promising. So a company with a lower market cap is producing 4 times more free cash flow. So this valuation somewhat makes sense when you value Taiwan Semiconductor. Okay. And if you went into Broadcom, you would get a similar situation where, although I believe Broadcom might be a little too expensive, you're still looking at a company that's, from a market cap perspective, a little bit bigger than Tesla. But when you look at the cash flow generation, it's very different. 25 billion versus 6.8. Again,
Yeah.
you're more than 3 times higher in cash flow. So remove the labels of what kind of company it is. At the end of the day, we buy businesses. If you're a longer term investor like myself, you're buying businesses that are going to produce cash profits, and they're going to get bigger, more valuable, and they're going to return that cash to us over time. When we look at the most valuable businesses on the stock market, you would find high free cash flow generation, high free cash flow generation, high free cash flow, high free cash, high free cash. It's this one that's low free cash. So this is the oddball of the pack, right? So call Tesla whatever you want. The financials just don't measure up when you compare them to its peers at the very top of the food chain for the stock market. All right, so the stock market is trading the stock down. The earnings call is underway. We'll kind of let that marinate a little bit. Any additional thoughts on Tesla?
No, this is a difficult one. There's definitely believers and non-believers, and it's just a fun one to watch, I think.
Yeah, I bought Tesla stock. I bought it, like 10 years ago, 12 years ago. And it was on one of those Tesla was being doubted. It was one of those periods of time when everybody was against Tesla. Everybody was doubting him. And I'm like, this guy's trying to pull off the impossible. I think he's going to get there. He had a lot of government assistance, by the way, early. If you recall, the government was helping companies who wanted to start EV companies, and Tesla took a lot of money from the government.
Yeah.
So I put some money down and it worked out, and then I sold it, but it was strictly non-valuation investment. I'm like, back then they didn't make any money. They were just burning money. But I thought, I think these guys are going to make it, and they did. And then after that, just things got really silly because it just seems like this stock trades on stories purely. And that's not the lane of investing that I follow. I follow fundamentals. Fundamentals have to prove the stories that I'm believing in. It's the evidence of that business is worth the stock price, or it's worth more. That's what I'm looking for. It's companies that are worth more and are being priced too low. I can buy them, then make lots of money as that stock price reverts to its intrinsic value over time. All right, so let me see if there's any comments from in the chat. We've got 457 attendees. Thanks so much. Hopefully you're enjoying. You find it interesting, our discussion around Tesla. Shadow Guy is in. Magical Self. We're going to get to these in a few minutes. Hang tight. We're going to look at APD and TMO, and we'll give you our comments on those. Just hang tight. And let's see any others. No, that's it. So, all right. So that's where we're at with Tesla. Let's take a look at APD, and we'll come back to Tesla in a few minutes. I wanted to move on to just analyze a few stocks that are being requested, as well as some others that announced earnings. And we'll come back to Tesla and take a look at where the stock's trading maybe in about a half hour. Looks like Kareem Biggins is on. Good to see you. Hope you're doing well. All right. So first order of business, Netflix. They really had a tough day. Tough day, went down 10%. I have been pricing Netflix as being too expensive for some time. And it's one day, right? But it had been trading. I'd love to see your charts on Netflix, by the way, because it's going sideways for, I guess I'm going to guesstimate since May 2nd. So we're well into October. So that's like 5.5 months. Your money would have been pretty much going sideways for 5.5 months. And the direction of the stock is more important. Where's it going to head? This has been a winner. If you bought it at the right time, you made some good money. I should know I bought it around this range and I made good money on Netflix. I sold it. I would think that I sold it too early and didn't participate in the rest of the appreciation, but that's because the valuation was just, it got a little too expensive, and it kind of got a lot too expensive, to be frank. I keep stocks that are just a little too expensive. If they become too expensive, then I just sell them and cash in and move on. So I probably cashed in a little early, but who knows? Maybe it'll start really selling off. And these guys, one thing that I'll note, they are embarrassed. They don't put this in their financials. They used to, but I'm sure that our friends over at Google Alphabet will. YouTube's the number one streaming platform in the market. They have 12.5%, and they're growing faster than anybody else. So they're bigger than Netflix. So Netflix will never catch up. It's just the numbers. You can't catch up if you're smaller, growing at a lower percentage. And if you look at the financials or the earnings that Netflix produced, they had this other category, which includes YouTube, because they don't want investors to know. We're in second place, and the distance to the number one player keeps getting, broader, and we're falling further behind. But I keep an eye on it because as an investor, I own Google Alphabet, which is YouTube. I used to own Netflix, and this is one of the metrics that compelled me that, hey, you know what? I'm going to ride this horse. I'm going to ride the YouTube horse. I'm not going to ride the Netflix horse. Netflix, from a valuation perspective, you guys saw me complete the valuation for Tesla. Here's Netflix. Not as bad as Tesla because these guys produce more cash flow. Just if you recall, Tesla was at 6.8 billion. These guys are 10.3 billion is expected for the trailing 12 months plus growth. They're growing about the same clip as Tesla, but their market cap's way down at 484 now, and their equity value is 362. So just priced 25% too high based on cash flow and priced 5% too high based on earnings per share. If this stock could drop down to 700, I would be a buyer of Netflix, but that's a ways away. They'd have to really drop down. But I think that Netflix, the other thing I didn't like about their earnings is they brought out the excuse machine. And the excuse machine they started to try to sell investors was, well, we had this tax issue down in Brazil and it cost us some money and yada, yada, yada. It's like, guys, okay, so you didn't manage your tax liability well. Just, be accountable. Like, you didn't manage your tax well. Okay. But to have this long-winded story of, well, it's a one time. Well, as soon as we allow them to use their excuse machine, this quarter, we didn't manage our taxes right. Next quarter, it's something else. And the quarter after that, it's something else. Just deal with it. Okay. Expenses were higher. We think we're going to improve it. Move on. So I didn't like that about their messaging that came out. All right. So that's Netflix. Could you show us the graphs on chart, on Netflix?
Sure. So once we got to the bottom in 2022, and you've already mentioned this, that was quite a run up to there, almost a six bagger. But they have gone sideways, like you were saying. They are, in fact, they did touch the 200-day moving average in intraday trading today. So let's see when the last time they've done that. It's been a while. Wow. So the last time they didn't even do that in April of this year. So the last time they did that was in October of 2023. So that 200-day kind of acts like gravity once you get too far away from it.
Mm-hmm.
It's kind of like the moon and Earth that's going to keep pulling it back towards that 200-day moving average. And today was the day. So they are trading sideways. They traded as high as 1329, and excluding today, looks like they traded down to 1152, and today they're down to the low. The close was 1116. The RSI went from about 60 or 70 down to almost in overbought territory already, almost in just one day. That's pretty incredible.
You said overbought. Did you mean oversold?
Oversold. Yes, you are correct. I
Yeah,
do that a lot. I apologize. So
I do
they're
it
uh,
too.
they're they're at an RSI of 34. So they are almost
Oof,
oversold in just one day. When
incredible.
yeah, they were as high as 60 or so. And
Uh-huh.
the PPO has been in negative territory, and we had a bearish crossover today with the price movement. So, and it looks like the money flow went from 0.15 to 0 today. So it looks like the sellers moved in big. Well, we can look at the volume. They had
I-
a volume of 14
I've got a
million
quick
shares today.
I've got a quick theory, and then I'm gonna say that these guys could sell off down to 1,000 a share. Here's why. I'm seeing that if you look at the buyers that bought at, I guess, $1,200 a share, there's a good number of buyers that are there that
Hmm.
probably just sold all their shares. They're like, okay, you know what? I don't want to lose any money. They sold. Well, who's holding the stock now, right? If they sold, it's going to come down, to about $1,000 a share. And they're going to have to decide, do we buy or do we sell? It'll probably have a lot of support at that level, but that's what I would guess, being the amateur uh, chart analyst that I am. What do you think of that statement?
I think it's a very valid statement. So if I just put my cursor here, that's also a resistance point that we saw in March. It was a little higher, so about 1052, but this resistance point uh, would be right at that level, right at 1,000
Mm, okay.
per share. So I think you are pretty much right on with that price level. If it breaks down through 200 in the next day or two,
Mm-hmm.
then I would be looking here.
Mm-hmm. Yeah, it'll be interesting to see. Um, and the Tesla stock is down 1.4, 1.5. The earnings call is going on, so we'll have to give it uh, I don't know, 12 hours to we'll figure out if this thing's going to trade up or down, maybe 16 hours, because I wouldn't be surprised Tesla could be trading higher tomorrow. It's that kind of stock. Unpredictable.
Hmm.
Thank you, sir. That was super interesting. I appreciate it. All right, let's move on. There's got some other companies out there that are announcing. One of them is SAP, a big software company headquartered in Germany, and they create software programs that some of the biggest companies use. For example, Disney uses SAP, Some of the biggest financial companies use SAP. It's good software. They've been around for a long time. And their stock is selling off. What's going on in SAP land? The stock had been performing well for the 1 year, year to date, okay, keeping up with the S&P, and then the 5 year, okay, 86%. That's pretty good with a small dividend. So not a lot of press release on the news that's being reported through stock analysis. Let's see if I can look at their press release that they're putting out here. So let's see here. Q3 results. All right. So looks like their backlog is up 23%. All right. Their revenue was up 22%. The ERP, which is enterprise resource planning, that's financials, procurement, supply chain, HCM, that kind of thing, up 26%. That's very good. Oh, okay. So this is how, I don't like this. Total revenue is only up 7%. So it's a little bit too much selling here. They kind of fooled me. I thought they grew it by 22%. They only grew by 7% because they have a legacy business, which is on-premise software. It's perpetual license software that they sell, but their new business is growing better. Got it. But overall, they're only growing by 7%. All right. So that's is underwhelming. Okay. And that's why the market's selling off the stock, I'm sure. Other companies, for example, SAP is comparable to, let's say, Intuit. And I know Intuit sold off, but Intuit's growing better, I believe. So yeah, 15%. Okay. And these guys do software. Their enterprise software is quite a bit simpler for smaller businesses. They do TurboTax, and they also do a couple of other areas of business, but they're growing at 15.6. And the market has not liked their growth, which sold off to stock. I think very highly of this business. I think it's discounted. So I've been buying it up. But these guys here have been under pressure at certain times during the 2025 year. And it looks like SAP may be put under pressure because their growth is not very good. Comparing their SaaS business versus their old business. So cloud revenue is 5.3 billion for the quarter. Okay, total revenue. So this is SaaS. I'm not sure where their legacy business is. I think it's this number, 8 billion versus the 5 billion. So they're growing at 7%, which isn't overly exciting. It's single digit. It's profitable. They generate cash. That's good. But that's what the market is picking up on, is you're going to be a slow grower. They don't have a very strong, or I should say, it's not like they're going to be a big AI kind of enterprise. They're going to say they do use a lot of AI. They're going to say AI every other word, but at the end of the day, it's kind of legacy software. It's the stuff we've been using for 40 years, and they do it very well. But it's not new stuff. It's not AI, ChatGPT kind of stuff. It's not that at all. So they're down a little bit. Any charts on SAP you can share?
Yeah, so what you're saying is true. They have been on a downtrend. The 200-day looks to be flattening out, and if they continue to trade below the 200-day, that'll start declining, but it looks like yesterday they moved above it. So that'll help keep that 200-day moving in the right direction. They did break out above this trend line 3 days ago. So that's a positive sign. The RSI is sitting at 55. The PPO just moved back into bullish territory, maybe a week and a day or so ago, but it had spent several months, at least a couple of months, in negative territory. The one encouraging sign that I'm seeing is the accumulation hasn't really trailed off. It's at a 52-week high, and the money flow is still very positive. So it kind of gives me some encouragement that we should see prices that are moving higher rather than lower at this point.
Interesting. Well, thanks for doing that there. Kind of moving along. Let's take a look at Big Blue, IBM, International Business Machines. And these guys, their stock is under pressure, 4.72%. And I don't know if you recall, we had a conversation 2 weeks ago, and we were looking at companies that are in this peer group from an industry. And you asked me to weigh in on IBM. Do I put IBM in kind of like the new generation, cool, exciting, valuable business? And I said, no, these guys are formed in, 50 years ago, and they're going to have a hard time keeping up. And here we are with an earnings that underwhelmed the market. They've been a slow grower, but expanding their profit down at the bottom line. But that just in technology, you can't get away with that, because your margin is somebody else's opportunity. If you're not growing, your competitor's growing. Your competitor's growing and taking that market share away from you. So these guys not growing, I think, shows vulnerability. These guys are their revenue, and here we go again. Revenue, software. I want to see their total revenue. So up 7%.
16.3 billion.
Yeah, so that's total revenue. Okay, so that's pretty good. 9% growth is good. Gross profit, 57%. Cash flow, free cash flow, 7.2 billion year to date. So that'll be a useful number. All right. And software biz is growing nicely. Consulting, not growing very fast. That's okay. The consulting business is not as profitable as this. And this includes hybrid cloud, Red Hat, which is a Linux, product, is growing nicely. It's an operating system. Automation, not sure what that is. Data, they have a database. I think their database is, what do they call their database these days? They've changed the name a few times on me. All right, so that's where the business is at. They're providing their guidance, free cash flow. They're expecting 14 billion for the full year. That's very good. So slow growing, old technology company. Market's not buying the stock up. The stock year to date had been working 30% rise, 1 year 24, 5 year 161. So it's taken a nice ride up, but that may be slowing down. Now I look at a business like this that has kind of like legacy, old school software, and I just don't understand why the market could treat IBM like that and just abuses Adobe. Adobe is growing a little better, a lot better actually, has better margins, a better, more software-based business, and the market's just been abusing Adobe. So just an aside. All right, so these guys are selling off. Do you have any charts on IBM?
Yeah, this company's been around forever. But I went back 15 years because this company, basically the price of the stock has just traded sideways basically since 2012 all the way through 2023 before it finally broke out, based on what they're doing right now. So that's not very encouraging to see a stock like this. It's fun to get in on them when they're doing this. But I'm not so sure that this doesn't reoccur at some point here in the not too distant future, whether it's at this price level, or maybe a little bit higher or a little bit lower. But they're a company with an old company with a culture that's very difficult to change. I've worked in those kinds of companies myself, and they don't think very agile. So I don't know. This is
At
pretty
one time,
exciting, but yeah,
IBM was like the 1,000-pound gorilla that everybody had to listen to.
yeah.
They set the narrative. They set like technology trends. It was them. Nobody got fired for buying IBM. Well, that was 1985, and ever since then, IBM's lost more and more of its power. And now it's like, yeah, you buy IBM if you're old school, really old school. So that's where they're at now. And as you look at this chart, right, it's kind of amazing that the stocks really performed over the last year. The question that I have that is not answerable is, what's their catalyst? What is going to move the stock higher? Is it, hey, we're going to, like for Tesla as an example, robots, energy storage. Okay, I get that. That's real. And that could be a catalyst for future growth. What does IBM have? They have Watson, which is AI they've been trying to get the companies to buy for the last 15 years, but companies aren't buying. Everybody wants the new shiny stuff, which is OpenAI, Gemini, all the new shiny companies. So that's missing out of the IBM's, forward or future is, what's the catalyst? I don't see a catalyst that's going to make the business more valuable.
Quantum could be one thing, but there are a lot of companies working on that as well.
I agree. If they nail quantum, I take it all back.
Yeah.
Yeah. So, and here's Magical Self. He's on top of his game. Quantum computing. And again, if they come out with a quantum computer and an affordable one, then I take back all those comments.
But once again, they had the PC business pretty much. They could have had it locked up in 1985. And they were of a mindset that basically it came down to culture again, and let a little startup
Microsoft
basically whip them.
Well,
and you have other
the geniuses at IBM looked at hardware because back in the 80s, you got to think back. I've heard Peter Lynch say this, which is kind of silly now. He said, don't buy a stock who creates a product you can't hold in your hand. Like iPhone, okay, you can buy that because you can hold it in your hand. Well, that means you're going to eliminate Google. You're going to eliminate Meta. I mean, you got a long list of really valuable business. That's kind of nuts. IBM had the same kind of mind block, which is, well, the hardware business, I could see it, I could touch it, I could manufacture it. I got supply chains. Let's keep the hardware business. And we'll let this little startup Microsoft handle the software business. They gave away the most valuable part of the whole ecosystem of a PC. Microsoft became gigantic. Bill Gates became the richest dude on the world. Just a blunder, to say the least. All right, enough beating up on IBM. Let's go to Lam Research. Let's pick on somebody that's way bigger than me. Lam Research is doing well. Lam Research has been getting it done. They picked themselves up after being sold off quite a bit. And then they said, what are you guys talking about? We're worth far more. So boom, look at that. Really nice rise. I started believing in these guys, bought the stock. I think I took the elevator ride up to here, sold it. Haven't been in Lam Research for a while, but I made good money on Lam Research. So nicely done. And look at this rise. Beautiful. Very nice. Let's see if this is all, sustainable, or if it's going to potentially come back down to intrinsic value at some point. This is becoming a pretty substantial company at $178 billion of market cap with revenues of 18.44. P ratio, if you're growing 34, would be okay. Analysts think, man, this thing's getting too expensive. It is getting too expensive. Now, the growth is there. Growth is expanding. Look at that. It looks really good. Now, I'm going to look at their financials in a bit because this is not including the quarter they just closed. I'll look at that in a second. But just to kind of give you some history, these guys have been growing. These guys support the semiconductor space. They're not producing semiconductors. They provide the materials so foundries and the producers of semiconductors buy machinery and supplies and materials from this company, and then they produce their semiconductors. So these guys have gross margins of 48%, which is why they don't have margins like NVIDIA, which are much higher, but their profitability is there. Real nice profitability, very good free cash flow yield. The forecast analysts are divided on what this thing's worth. Some think it could go higher. Some can go lower. They think it's priced too high by 14.66. The quarterly, we're looking at the quarter Q1. They have a fiscal year that ends at the end of June, and really good growth, 28%. And it looks like based on where the stock's moving, they achieved that type of growth. Profits went up nicely. PE is coming down, or no, analyst 26. So looks good. This business is growing nicely. It is going to slow down. You see this slowdown now. I happen to believe the semiconductor is cyclical, and that's what it's showing there. It's slowing down. And it's going to slow down considerably going forward. So I do have a valuation on Lam Research, but I need to update my numbers off the latest financials. Why don't I hand it over to you if you have any chart information, and then I can come back to my valuation.
This is another one of those cup with handle formations. And if you guys had mentioned this chart, I don't know, in August, I would have had a price target of 143 based on this pattern. And look where it's trading. It went to 153.
Man,
these patterns are very, very powerful. Occasionally you'll see one form and then it falls apart, but I probably have 6 charts that I could show you in the next 5 minutes where you see this pattern, calculate the price target, and within 2 months or so it hits that price target. So these are very powerful. I don't know where it goes from here. It is getting somewhat extended from its, let me save this just so we have it in the future. It is trading quite a bit above the 200-day. It's about 58% above that, and these moving averages act somewhat like gravity. So it is trading above the 20-day. It did test it intraday. It is trading above an upward sloping 50 and 200. The RSI was in overbought territory and has since moved back to about 58 for an RSI. The PPO is in positive territory, but we did have a bearish crossover on the 3rd of October. So you can see that it's been, let me go down to just one year. A little easier to see instead of looking at 5 years. So, oh geez. So once this PPO started pulling back, you can see that it kind of traded sideways for a while. We'll see if that continues. Let's let these other averages catch up with it. That can happen. Just trade sideways for a while, and these averages will move closer to the price. We do have accumulation, which reached a peak also at the beginning of October, and then we moved into a little bit of distribution. The money flow was very bullish, but now it's sitting in here making up its mind whether it's going to stay bullish or move into bearish territory. So that'll be something to keep an eye on moving forward. Does it trade sideways or does it actually break down?
Excellent work. Thank you, sir. Let me come back to my screen and I can finish the valuation on Lam Research. Okay, so the business has been growing well. The rise in the stock, just really, really nice rise. And the valuation or the stock price just got above what I calculated as the valuation of the stock based on cash flows and earnings per share. So let me update the valuation here. I'm going to move this to 7.5 because interest rates are going to fall. And now I'm going to look at some trailing 12 months free cash flow numbers to update that number. What we're trying to do is create a forecast of cash for the future. And then we're going to discount that cash to today's value. Got that number there. And what we'll do is we'll go trailing 12 months. I'm going to have to calculate that a little by hand because the website is not giving it to me just yet. So 2382 is Q4, 1 billion in Q3, 553 million in Q2. And now the fresh number, the cash flow from operations was 1.7 billion minus capex. So that is our trailing 12 months. And we're going to multiply that times 1 plus its growth rate. And I probably entered something incorrectly. All right. So the growth rate, they're growing nicely. Top line revenue is growing quite nicely. So I'm going to move this to 15. Now I kind of take that back. The growth, as I showed on the forecast, the forecasted revenue growth for this business, as we get next year, it's going to grow by 10%. And then after that's 8% and 10%. So let's go with 10% on the growth rate. All right. So cash is 6.7 billion and debt was 754 plus. So we've got about a 6% discount on Lam Research where it's sitting today, where it's being priced. As I look at the earnings per share that we expect for the next 12 months, expecting $4.63. P ratio 24 is fine. And we're going to change this to 12. So this thing is fairly priced as it sits at $141 per share. So not a discount available. If you're very optimistic on the space, then go for it. But I don't think there's much left on Lam Research from a opportunity to make lots of money perspective, because the stock is being priced fairly based on my calculation of free cash flow, my calculation of future profits, and discounting those profits to today's value. So Lam Research, having a good night. Looks like the stock is going to be up about 2% this evening. Let's check in on Tesla. Tesla is down a little bit. The earnings call should be through the comments that Elon Musk would have provided. I wonder if we have any comments coming in. Nope, not yet. So that's where Tesla's at. We're still down on Tesla. We'll see what kind of headlines come out and see if the stock moves from this point. All right, so we caught up on Tesla. There's a couple of requests out there. And let me check in on the chat, and then we're going to get into some requests. So I think I left off on, so Falls Grave, we can look at SPGI. And so EQT reported its third quarter Tuesday. Yeah, I noticed that. I did cover it. I think I covered it yesterday on the live stream. If you want to watch the live stream, I've got it in there. And I can do a quick kind of refresher. Everything's been updated, so it'll be easy. Put that on the list. And thanks for the comments on quantum computing from IBM. Good to know. And I'm caught up on comments there. Thanks everybody for tuning in. Appreciate it. Let's get into APD. Air products and chemicals. So I see their trucks driving around. They distribute atmospheric gases, specialty gases, and so forth. Yeah, I've seen their trucks, right? They have these big tanks and so forth. And these guys for the 1 year, not doing well. 5 year, not doing well. Interesting. And they're going to report on November 6th. These guys are probably, let's see, specialty chemicals and materials. Okay. Market cap, 56 billion, revenue, 12 billion. And their P ratio is a little high for this year at 36. And then next year, 19.8. Analysts do think it's discounted. Their revenue has been contracting. They had 2 good years and then contraction in 2023. Their year ends September 30th, their fiscal. And then their 2024 year down 4%. Year to date, we're down 0.38. So this doesn't look good. That's probably why the stock is selling off. No growth there. I don't know that the economy is, firing on all 8 cylinders right now. I think the economy is doing okay, but it's not doing great. Free cash flow is negative. That's a bad sign. Real negative. So that doesn't look good. Its gross margins are low gross margins. They're a material company. They're selling these gases, and they're going to have to take a commodity price when they sell their product. So, so we have profit margins. All right. So not an overly profitable business. And if I may say, not an overly attractive business because they don't have big profits, big cash generation. There are some analysts, 11 of them, that are pricing, or they believe this stock should be priced higher. They think it could go up about 28.5%. And the forecast going forward looks good, that they will likely be growing. So that looks good. The growth looks really good, especially on the outer year. Not sure how they're getting to a 16% growth, if the economy is supposed to do really well then, or how they're getting there. But that looks promising. This would be a good watch stock. And if they start to grow, you can probably catch this stock before the market begins to price it up based on its fundamental performance. So this might be a very good watch stock. Right now, it's going to be hard to price it, but we'll see if we can price this stock on the fly here and see if we can set up a forecast on our own. So this is a material stock. What are the things do I want to see? Balance sheet. One thing that could be a showstopper for me is debt. These guys have $18.37 billion of debt with $2.3 billion of cash. So $16 billion of net debt. And their debt to EBITDA is 4. That's above the 3 that I like to have, especially with the low margin business. How quickly can they pay off that debt? They're not making a lot of money. They're being burning cash. Remember that cash line? That didn't look good. So I'd probably wait for this business to get a little healthier. If you're interested in following this stock, I would wait for the earnings to come out and see if they're on the road to recovery. They are growing their business. That's good. Free cash flow is still negative. I'd want to see this kind of revert back to a positive cash flow. Then maybe we can establish, maybe in a quarter or two, let's use an average cash flow that they were operating with in the past. But this one here, there's just not enough there. It's not a very desirable business. Again, it's a $56 billion market cap business that's not generating free cash. It's not growing. There's just not a lot to work with. There's too many good options ahead of Air Products that I could deploy capital with and do well with. Why am I going to take any chances with a business that isn't growing, gross margins of 30%, burning cash, bad balance sheet? I'm not going to get there with this one. So thanks for asking on Air Products, and hopefully you found my comments interesting. Let me see if Daryl's got any comments on the stock with regards to charts.
Yeah, so after the global financial crisis, they went on a real growth spurt. In 2011, it looks like they broke above this previous high, and then they went on a run basically all the way to 2020. Then we had the pandemic, and then they raced up in 2020 and 2021, but pretty much since then they've been trading what I would call sideways. So I am going to save this and go down to just I'll do 5 years. So this auto resistance line has served as support 1, 2, 3, 4 times, served as resistance once, did break above that, but it did come back and test it, went above it, came back and test it. So you know what I'm going to say next. Don't be surprised if it comes back and tests that again.
Yeah.
They are on a downward trend at the moment. The 200 is just now beginning to turn over, and they are trading well below that 200. So that 200-day is going to start trending down, and I would not be surprised to see this 210 before too much longer.
Yeah, thanks for sharing that. Yeah, and moving on to the next stock, Thermo Fisher announced their earnings this morning, and the earnings were good. The market liked what they saw, and it was on a down day, which is double positive, right? This stock's really sold off, and then it's picked itself up year to date. Over the 1 year, not so good. 5 year, not so good. Man, look at this. Just up and down, choppy for 5 years. So this thing hasn't picked a direction. And oftentimes, I believe these guys are diagnostic and research, healthcare. So they're creating a product. And I don't doubt that these guys make good products that are in demand, but it just doesn't have the same kind of profit profile as other areas within healthcare. So this is a $214 billion market cap company, PE ratio of 32. It's priced fairly according to analysts. And this is the announcement was on September. They announced the September 27th quarter. Decent growth, single digit, 5%. So this is a big business. That's a slow grower. They do have growth for the last 4 quarters, and that looks decent. Let's get down to profit. So the free cash flow does look good. Nice, consistent, but they're not growing it. So it'd be nice to see them grow it. The stocks that are really flourishing, you tend to see a growth. And these guys have been flat for 5 years and counting. So I think that's where the market's like indecisive about this stock is, are they going to grow their cash? Are they going to grow their revenue? Neither has really been all that, impressive from a growth perspective. So I think that's why the market's indecisive. As mentioned, these guys create a product. So the gross margins aren't very high, and it doesn't leave the real substantial profit margins that you find with a very desirable business. Like we looked at other businesses that have much better profitability, much better gross margins, and their free cash flow yield is decent. So yeah, these guys are worth a lot compared to its peers, but I'm not overly excited about this business. I always, I get to pick which sectors and industries I invest in. I'd rather go with the ones that make lots of money, that are growing and are going to be substantially bigger. This one's going to be a slow grower. Good. It's going to perform well on the earnings per share line. That's also good. And PE ratio should drop. So that's going to look okay. Now, this product is inelastic, meaning we're going to need it whether we have good recession, bad, or we're in recession or we're in a boom economy, because they're tied to healthcare, but they don't pay much of a dividend, which is interesting. So this one, I don't have a lot to do with it. It's just not floating my boat. The profile profitability isn't very good. The cash flows aren't growing. So this one would be a pass for me. I'm glad they're doing well today, though. Any charts on TMO?
Yeah, I'm starting to sound like a broken record with cup and handles here. But this one just hit its price target of 560 based on this cup with handle pattern right here.
Uh-huh.
So if you can catch these early enough, you can ride those up.
Oh, looks good. All right. So maybe there is some trading that's going to happen on this stock. It caught a bid today.
Yeah, you do have some resistance at 614.
All right. Looks good. All right. Let's hit SPGI. S&P Global. These guys are financials. They're financial data and stock exchange. So they're the ones that have the S&P index. And over the 1 year, not good. Year to date, not good. 5 year, okay. They definitely have a business, but it looks like the market doesn't really, they're not overly excited. This is during a time when stocks have just been flying up. Within financials, we've seen superb performance of some stocks. It has a market cap of 146 billion, revenue of 14.7, and earnings per share $13. So PE of 36.9, forward P of 26, and it's a strong buy with a discount of 27%. Has pretty consistent growth, so that looks interesting that it's growing consistently. Let's take a look at other things. Free cash flow has been growing. That looks good. That's looking good. And their margins are good. Profitability is very good. So this business, back of the napkin, based on that growth rate, it's worth 105 billion to 130 billion minus debt. Let's see what kind of debt they have. They have about $10 billion of debt. So 95 to call it 120 billion in value. And they're above that. The market is looking at their fundamentals, not really eager to make this stock go higher. So this stock is priced a little expensive. It's it's priced above its intrinsic value, and the market's kind of trading along those lines. It's not bidding up the stock. Again, within financials, we've seen some stocks do great. Even these big banks have been doing great. This one's been left behind. It's ratios, its metrics, its valuation isn't good enough. So, any chart comments on SPGI?
Yeah, just quickly, we've looked at some company charts where they had decreasing prices, but we actually saw increased accumulation. This is definitely not the case. The downward price is being supported by distribution. And that's not always the case. Sometimes you see prices coming down, but people still moving into the stock, which is kind of interesting to see when you find those companies. But this one is definitely in distribution mode, and we can see that with the money flow that has gotten pretty negative here.
Mm-hmm. All right. Thanks for sharing that. And I think we're coming up on our last stock, which is going to be EQT. And EQT is a natural gas company. They produce, gather, transmit natural gas. They're, I think, strategically located in the Appalachian area. They're headquartered in Pittsburgh, and the stocks really work for the last year, for the 5-year. And the reason I say they're strategic is if they produce natural gas, it can feed the turbines that are creating power for data centers in Northern Virginia. That's going to be a really viable business for them. For some reason, the stock really sold off, and oil prices were higher. I think natural gas prices had dipped today, but there's something going on here. I think they're being kind of grouped together with data centers to some extent. So these guys announced earnings yesterday. Over the 5-day, they announced yesterday. Their stock really didn't do much, and then it dropped today. But I think it was because natural gas prices came down. I know that CNBC has commodities. So, yeah, natural gas was down 1%. So that might be the reason for it. They're going to get their pricing based on the commodity. So that's why I think their stock was down today. Overall, I think it's natural gas has a bright future. You can burn natural gas to create electricity, which is really good. And I think these guys have been flourishing. They pay a small dividend. Analysts think it's discounted, and their P ratios are still nice and low. When you look at their growth, they have been growing. And actually, there's been a boom lately. Their latest quarter, very good growth. That looks interesting. So This one has been a stock that I've begun to buy into. I did some research on energy companies, including oil companies and natural gas companies, and I really wanted to get a stock that was just focused on natural gas. I own Chevron, I own Occidental. They both have natural gas businesses, but they're a fully integrated. Speaking about Chevron, that's a fully integrated energy company. That's a good stock, but I wanted a pure play natural gas company, and I found it in EQT. I may be paying a little more than I would like, but it is a pure play natural gas player, and they are already doing business with data centers. The highest concentration of data centers is in Northern Virginia. You guys may know that, but that's where the internet was born, by the way. And a lot of data centers are headquartered there. So if you can provide energy into that area, if you can provide electricity, you're going to do really well. These guys are really killing it. 73.9% gross margins, good profit. You saw their growth numbers. So this one looks really interesting. And the forecast, we got 19 analysts weighing in with an 18% discount. The consensus, they're expecting that this year they're going to continue to grow, hit kind of a plateau, and then continue to grow again, with their earnings per share expanding this year, plateau, and then continuing to grow after that. So their forward PE is looking like it's going to drop unless the stock price rises, which I am betting that it's going to continue to rise. That's why I'm buying the stock. To show you the valuation on EQT that I've got, I just updated it because we had some numbers come in, and I think it's discounted by 24%. Now, it's not the biggest discount I jump into, but I think strategically I'd like to own a natural gas play. That's the reason I bought into it, and we'll see how it goes. Any comments on EQT with a chart perspective?
We'll just look back for a couple of years. I look back a lot longer than that, and it was a little hard to explain what I was seeing, but we did have some prices that were kind of topping off here, trading in a sideways range. And then, like you said, we had the AI, I don't know what you call, I guess, premium put on this stock. I have a utility company that's the same way. They're my local utility provider, but they have contracts with Meta. So they trade like an AI stock. And this one looks like it got an AI premium as well, because the price has shifted up by at least $10 a share, and then basically started trading sideways again. So you're thinking they're still discounted. So this one could be one to ride for a while and see what actually comes out of this one.
Yeah, and Magical Self asked, what position size am I comfortable with? So the biggest position in my portfolio is over $300,000 with Meta, and my position in Chevron is roughly $60,000. And EQT, I'm thinking $10,000. I don't want to bet the farm on it. I want to start, investing in EQT. I want to follow it. I may add capital to it, but it's not going to be a giant bet. The discount isn't there. I may be coming late to the party, so I'm not betting a whole lot there. And looks like a suggestion out there from the underdog investor. He's suggesting a company, BG. I'm going to take a look at that in my free time. Thanks for the suggestion there. All right, everybody, let's check in on Tesla, the star of this show, and it is down 1.59%. So it looks like the market at this point isn't overly excited about the earnings. So looks like that's where it's going to land. They did have
that's well within the options implied move.
Interesting.
Yeah, so that was 7.2%. So this is only 1.6, you said. So that's well within the options implied move.
Yeah, perfect. All right, we had 480 people attend the live stream, the watch party for Tesla. That is a very good audience. Thank you, everybody. And if you're new, a lot of you are probably new to seeing our stream. We stream every morning at 9 a.m. Eastern, 6 a.m. Pacific. And like the format you observed where I look at fundamentals, I try to look at, big picture of a stock, trying to get to intrinsic value for a stock. And then my colleague Daryl, he covers the charts, does an awesome job on charts. So you can get two different points of view on a stock. So join us each morning if you can on Mondays, Wednesdays, Fridays, 9 a.m. Eastern, 6 a.m. Pacific. And then when we have earnings, we take the opportunity to cover some of these big stocks. So this week, Tesla being the biggest name, we live streamed. Next week, we got some gigantic names. So look for the afternoon streams next week. As our availability allows us to host these, we will do it. So thanks so much, Daryl. What's going on with your channel? Can you give us an update on what's happening with your channel?
Sure. Pull it over here real quick. And go to my videos, as I'll be putting out several of these videos over the coming weeks. I usually, for all of my holdings, I try to put together a 9 to 12 minute video covering the charts and covering some valuation metrics. I look at fast graphs for all of them and basically give my thinking about if they're showing weakness or strength as they move into the earnings. So you'll be seeing quite a few of these videos over the next week.
Excellent. Thanks, Daryl.
Okay. Thank you.
All right. Well, we are done with the Tesla live stream. Looks like Tesla is beginning to recover a little bit, but we'll see where it goes tomorrow morning. Everybody have a terrific night. Thanks for tuning in. Really appreciate your time. Hopefully you found all the content interesting. Thanks so much. Have a good night.